products focusing on health and wellness, and Select branded products focusing on lifestyle. We believe that both brands have the potential to be the largest mainstream cannabis brands in their category, and we will be putting significant energy, time, and most importantly, capital into the development of these two brands. Most importantly, we believe the Select deal will drive meaningful long-term shareholder value. In addition to Select, we have recently announced the acquisitions in Arizona and Ohio. In Arizona, we announced that we have acquired the exclusive right to operate Absolute Healthcare's Emerald Dispensary, located in Gilbert, which is southeast of downtown Phoenix in one of the most densely populated areas of the city. The dispensary will be rebranded as CURA-LEAF and is one of Arizona's largest, longest-standing, and highest-grossing medical dispensaries in the state. In Ohio, we announced that we had secured an option to purchase Ohio Growth Therapy's medical cannabis cultivation and processing license and 32,000 square foot facility. We continue to identify and evaluate opportunities in highly populous, limited license states that are complementary to our strategy, and we are confident that we will continue to execute on deals that will grow our presence in these key markets. Further, we continue to work closely with elected leaders, the industry, and critical stakeholders to advance legislative change in the cannabis industry. We continue to monitor pieces of legislation ranging from descheduling cannabis to adult use proposals, banking changes, veterans initiatives, social justice, and cannabis research. One initiative of note is the SAFE Banking Act, which would offer protections to depository institutions that provide financial services to legitimate cannabis businesses and service providers. We believe this bill will be put on the floor of the House of Representatives this summer for a vote and will continue to build momentum for cannabis reforms. As of May 30th, 2019, 184 congressional members and 30 senators have co-sponsored the bill, and in May, a total of 33 state attorney generals sent a letter to congressional leaders urging that the bill be passed. In addition to the SAFE Act, the STATES Act was reintroduced in April. The STATES Act would recognize U.S. state laws that have legalized cannabis either through legislative or citizens' initiatives. We continue to monitor the progress of this bill in both the House and the Senate and are working with legislators to garner support. Federal-level legislation will be an added catalyst and have a significant impact on cannabis companies in this country and the perception of the financial opportunity in the U.S. We believe that the passing of either of these acts will enhance the availability of financial services for and the financial transparency of the cannabis industry. We continue to believe that federally enforced safety standards will also soon become a reality to ensure that patients who rely on or consume cannabis products can be sure that they are receiving safe and as advertised products. CURA-LEAF has always been and remains laser-focused on adhering to the best practices that will allow for us to provide not only best-in-class products, but also those that adhere to federally enforced and regulated standards. Overall, we remain optimistic about the growth in the U.S. cannabis market and confident in our strategy to capitalize on ever-improving market conditions. We are very particular about how we execute our objectives and deploy our capital with a prudent, smart, strategic capital allocation approach. We are focused on identifying only those assets that are complementary to our strategy and offer an efficient entry price. Given the volume of our recent acquisition activity, we felt it was appropriate and important to share with investors pro forma revenue, which we believe is a more accurate indicator of our overall strategy and long-term growth potential. As such, we reported an industry-leading $75.1 million in pro forma revenue in the first quarter, demonstrating the power of our strategy and ability to generate significant growth and value to our shareholders. As the largest single shareholder of CURA-LEAF, I am extremely pleased with the strategy we are following, the momentum in our business, and our current trajectory. The board and management continue to remain firmly focused on our strategy to create the most valuable cannabis company in the world. I will now hand over to Joe to discuss the operations of the company in greater detail.
Thank you, Boris. As Boris described, we continue to execute on all aspects of our strategy and capitalize on a wide range of favorable trends in the U.S. cannabis market, the largest in the world. We now operate 45 dispensaries and have built out capacity in our facilities across 12 states with access to a population of nearly 108 million adults over the age of 21. We expect our store openings to accelerate through the remainder of the year from both organic growth and acquisitions. We serve over 56,000 active patients a month in medical cannabis and have launched a national CBD product line introducing a wide range of cannabis products to entirely new classes of consumers. Once the Select transaction closes, we will distribute products in over 900 legal dispensaries and will continue to develop the largest lifestyle cannabis brand in the country. In addition to Select, we continue to identify tuck-in acquisitions that enhance our growing positions in key markets, which I will discuss shortly in my state-by-state operating review. As Boris mentioned, our acquisition pipeline is full of deals in highly populous, limited license markets, and we are confident in our ability to continue executing on accretive transactions. I remain optimistic about our long-term strategy and our ability to generate significant revenue and free cash flow to create shareholder value as the markets continue to develop. Vertical integration remains core to our strategy as we believe it is the key to drive higher margins in the cannabis industry. Specifically, because we largely cultivate, manufacture, and retail our own products, we control price and quality, which translates to strong margins. As we scale, our vertical model will allow us to drive significant margin expansion across CURA-LEAF's and Select's portfolio of products, yielding greater long-term free cash flow potential. That said, our focus on highly regulated limited license markets require us to work through programs that don't always move as fast as we would prefer. We are working closely with regulators to unlock the full potential of those markets, and we have made significant strides in building out our operations this year to set the company up for significant growth through the remainder of the year. I would now like to review our significant progress in key states. In Florida, we have grown our store count to 24, with 5 openings so far in 2019, establishing a leading position in the state. More importantly, at the end of Q1, the Florida legislature passed legislation making the sale of flower legal and marking an important milestone in the growth of the overall market. We are extremely optimistic about this change in law because it coincides with the build-out of our new 5-acre Dutch glass greenhouse, which began producing meaningful harvests in March. While the growth in our Florida business was slower in Q1 due to supply constraints, we have seen significant growth in our business this quarter as we bring high-quality flower to the market and catch up our supply chain to our continuously growing fleet of stores. The demand for flower has been strong, and we have seen our daily sales volume nearly double over Q1, which gives us confidence in our growing prospects for the remainder of the year. We also expect edible products will be approved in Florida later this year, further increasing our ability to drive growth by delivering new form factors to patients. With over 220,000 active registered patients in the state, Florida is the fastest growing medical cannabis market in the country, having grown 176% year over year, and we remain on track to open and operate at least 35 locations by year end. We remain optimistic about our business in Florida and are set up for dramatic growth through the remainder of the year. In New Jersey, we manage the largest dispensary on the East Coast, and we are one of 2 cannabis companies in the state to sell oil-based formulations. We continue to remain the largest provider by revenue and market share in the state and remain on track to open 2 dispensaries during 2019. The 2 new dispensaries are an important aspect of our growth plan as we will get access to new population centers. We also continue to reinvest in our cultivation infrastructure and will continue to scale to meet an increased number of patients and demand. While the legislative prospects of adult use legalization remain dim, we expect significant growth in the market as the legislature looks to further liberalize the market and create greater access to medical cannabis. We believe the patient count in New Jersey could more than double in the next year, and improvements to the law will allow CURA-LEAF to capitalize on this growing industry through new retail locations and wholesale relationships. In fact, we plan to complete our first wholesale transaction this quarter and expect our business model will evolve to capture that opportunity as more dispensaries come online. Massachusetts remains a large opportunity for CURA-LEAF, particularly with the recent launch of the adult use program. We are harvesting and manufacturing regularly through our 50,000 square foot cultivation facility and operate 2 successful medical dispensaries. An additional 50,000 square feet of harvesting and manufacturing capacity remain on track to come online this year in anticipation of an expanded adult use program. We continue to work with the Cannabis Control Commission to finalize our adult use licenses for our cultivation and processing facility in Webster and our dispensary in Oxford, which are ready to begin adult use sales upon final commission approval. We also submitted for approval 2 more adult use dispensaries located in Provincetown and Ware. While we continue to build inventory and remain optimistic in the long-term growth of the market, we are disappointed with the pace of approvals and short-term development of the market. We expect the overall market to improve in the second half of the year and expect to capitalize on that growth with our developing infrastructure. However, we will likely miss the summer months in Provincetown given the slower pace of the approval process. In the interim, we continue to enjoy some limited benefit from the adult use program through service agreements and will accelerate our wholesale relationships to drive growth and create brand awareness throughout the state. Moving on to New York, CURA-LEAF was the first licensee in its class to open a dispensary and is one of only 10 licensed operators in the state. We are now operating 4 stores across the state and harvesting regularly from our cultivation facility. Construction that will double our canopy size is on track to be completed by the end of July and will position us well in the current landscape and for future legislative changes. We continue to work with regulators to improve the product approval process and increase form factors, including flower and edibles, so that we can tap into the full potential of the market. While the debate around adult use continues, we are focused on growing the medical program, which has the most potential for untapped growth of any state in the country, with current penetration low compared to other markets. With just a few modifications to the law, we believe New York could show the same growth characteristics as Florida and represent one of the biggest potentials for untapped growth in our business. The medical expansion bill, currently being considered in the legislature, would give healthcare providers discretion in certifying patients, increase the number of dispensaries statewide, and permit the sale of smokable flower. Senator Diane Savino, the bill's sponsor, said that she is, quote, very confident about this bill due to the strong legislative support. In the first quarter, our 4 locations achieved 17% market share in their first full year of operations, achieving well above average wallet share according to state tax data. We look forward to continuing to build momentum as the program and form factors expand. In Maryland, we announced 2 transactions in January that enabled us to achieve vertical integration with 4 operational dispensaries, the most of any cannabis company in the state. We are optimizing our 20,000 square foot grow facility and yielding strains with over 30% THC content, which continues to allow us to fetch premium wholesale prices, as well as drive increased and reliable repeat traffic to our dispensaries, all of which are achieving higher wallet share than peers. We expect Maryland to accelerate even further this year. In the last few weeks, the state of Maryland passed legislation allowing for the sale of edibles in the market, and construction is underway to build a new processing and manufacturing operation at our Frederick facility. Maryland is a terrific market, and we are optimistic that our vertical platform will allow us to drive significant growth and meet demand should adult use come to the market in the future. Moving on to Connecticut, we will complete construction of our new 50,000 square foot cultivation facility within the next few months. This increased capacity coincides with the opening of 9 more dispensaries across the state and gives us confidence that our wholesale revenue will meaningfully grow through the back half of the year. On the legislative front, Connecticut lawmakers remain aware of the large source of potential revenue that adult use represents. Both Governor Lamont and many state legislators continue to remain supportive of adult use and are working on various bills that would open up the market to adult use. With neighboring states enacting or debating adult use programs, we believe there is a high likelihood that adult use will become a reality in 2020. In Maine, we continue to provide management services to 2 of the 8 existing license holders. Draft rules for adult use were released by the Office of Marijuana Policy, and they are working to put the framework for adult use in place by year-end. CURA-LEAF will use its position in this market to be a leader in this new program. We expect to develop at least 2 additional retail stores this year. In the Midwest, CURA-LEAF won a processing license in Ohio earlier this year. Ohio is the nation's 7th largest state with 11.7 million residents. On May 1st, we announced that we had secured an option to purchase Ohio Grown Therapies medical cannabis cultivation and processing licenses and facility. Upon completion, the facility will include the maximum allowable cultivation of 25,000 square feet plus processing square footage that will allow us to bring our full breadth of products to the market later this year. Ohio's medical cannabis industry is still very nascent, and we are excited about the growth opportunity in this highly populous state, which has only just begun to make cannabis sales. Now, I want to take some time to touch on our West Coast strategy. As Boris mentioned in his opening remarks, we are incredibly excited and look forward to adding the Select brand, distribution network, and their outstanding and talented team members to our organization. In the meantime, we continue to opportunistically look for ways to expand our presence out west. In California, which is the largest market for cannabis consumption in the country, we closed on our acquisition of Eureka, which included a 110,000 square foot greenhouse with room to grow to 270,000 square feet, along with 3 dispensaries in development. We are rapidly expanding the facility to maximize its capacity. Eureka's cultivation facilities are located in Salinas, a region with the most favorable growing conditions in the country, and will supply our processing facility in Davis, where we began initial operations in April. We expect to start recording wholesale revenue in Davis this quarter. We are particularly excited to be launching a new line of vaporizer cartridges using a proprietary extraction process, which will make our oil among the highest potency and purity in the entire industry. Initial feedback from that product line has been overwhelmingly positive, and we are optimistic about the sales prospects. With established vertically integrated operations, strategically located dispensaries, and a sound expansion strategy, including our pending acquisition of Select's large wholesale presence, CURA-LEAF is ready to capitalize on the opportunity in California in a strategic and prudent way. In Nevada, we look forward to regulatory approval of our acquisition of Acres. Acres complements our existing assets in the state extremely well and is a major step in expanding our vertical platform. Recently, the Las Vegas City Council approved consumption lounges, and the existing Acres facility has 8,500 square feet that Acres management is planning to build out if consumption lounges are approved at the state level, where the issue is currently being debated. Las Vegas represents a key strategic market with over 42 million visitors a year who on average spend just 31% of their total discretionary budget on gambling. The opportunity to create CURA-LEAF brand equity with visiting consumers that live all around the country is very compelling. Earlier this month, we launched our newest location in Las Vegas at the heavily trafficked intersection between downtown Las Vegas and the Strip. We look forward to servicing new consumers from around the country and creating strong brand awareness. And finally, in Arizona, we continue to see strong revenue growth out of our 5 retail locations. Work continues on the build-out of and optimization of our 100,000 square foot indoor cultivation facility in Holbrook, with a focus on improving gross margins through increased vertical integration. We have completed the construction of our 6th Phoenix area dispensary and expect to open that location this summer. Arizona continues to be one of the largest cannabis markets in the U.S., with over 197,000 registered patients, a full 2.8% of the state's population, and we continue to believe adult use will be voted in by the state residents in 2020. We believe Arizona might be one of the most overlooked states and has incredible staying power and long-term prospects as we continue to expand our presence in this market. To that end, today we announced that we have closed on the acquisition of the Emerald Dispensary located in Gilbert, Arizona, which is our 7th dispensary location in Metro Phoenix. This acquisition gives us the exclusive right to operate the Emerald Dispensary, which is located southeast of downtown Phoenix in one of the most densely populated areas of the city. The dispensary will be rebranded as CURA-LEAF and is one of Arizona's largest, longest-standing, and highest-grossing medical dispensaries in the state. Combining Emerald's large patient base with CURA-LEAF's established supply chain is anticipated to enhance an already strong top and bottom line earnings profile in Arizona and further extend CURA-LEAF's ability to provide highly rated patient service. Finally, we are excited about the growth prospects of the CBD market and CURA-LEAF's ability to drive meaningful growth for our shareholders in that category. We just recently announced the launch of our CURA-LEAF CBD skincare line, a 16 SKU product offering that we expect to be sold in national retail chains throughout the country this year. In addition, we recently launched our pet-oriented CBD product line, Bito. CURA-LEAF Hemp provides entry to an important growth market that has been estimated at $22 billion in sales by 2022. We continue to develop our manufacturing and formulation capabilities and intend to be a market leader in the nascent but rapidly developing CBD market. Through our exclusive broker relationships, we are developing a deep pipeline of national retail opportunities, and we are optimistic in our sales prospects for the remainder of 2019 and beyond. More than just offering products, we are meeting our customers' needs in and outside of our stores through educational programs, community partnerships, and delivery services. We are creating a brand synonymous with quality, trust, and reliability, and in Select, we are inheriting the leading lifestyle brand on the West Coast with the same values. When coupled with our best-of-breed cultivation and processing facilities, outstanding sales and marketing, innovative and proprietary R&D, deep management, and targeted acquisitions, we are poised to continue to deliver outstanding greenfield development, strong same-store sales growth, and ever-expanding footprint for the foreseeable future. We believe that our execution in both organic development and on the acquisition trail sets us up for terrific growth for the remainder of 2019, and we expect to carry that momentum into 2020 as the unmatched leader in the U.S. cannabis industry. With that, I'd like to turn the call over to CURA-LEAF CFO, Neil Davidson, to go through a financial review.
Thank you, Joe, and good afternoon, everyone. As Boris and Joe stated, we were extremely pleased with the progress made on a number of our long-term growth initiatives this quarter. We continue to aggressively ramp operations in the states in which we operate and have worked aggressively to expand our cultivation capacity in a number of our key markets, including Arizona, Florida, Connecticut, Massachusetts, and New York. We remain disappointed by the Massachusetts adult use license approval process, which has been significantly slower than anticipated. We believe approval of our adult use locations in Massachusetts is a question of when and not if, but the timing remains in the hands of the regulators. Regardless, we are continuing to build capacity in anticipation of what we believe will be a significant adult use market. Vertical integration is a key component to our strategy, and, as I mentioned on our last call, growth will not be linear, but more step function in nature, which will drive a significant ramp in the back half of this year. As such, we believe we are ahead of the curve in preparing for increased demand in Arizona, Connecticut, and New York. However, our cultivation operations were not producing adequate supply to meet the demand brought about by the introduction of flower in Florida during the first quarter. Our Mount Dora facility is now producing consistent quality flower, and as Joe noted, our Florida revenues began ramping in March, with the month of May tracking at 40% growth over March alone. While we expect continued pressure on margins during 2019, given our planned cultivation and processing build-outs, we are taking the appropriate steps to ensure that we will have the capacity to meet the robust demand that exists in the markets in which we operate. In addition to building out infrastructure that will benefit the back half of 2019, we have been busy deploying capital on strategic acquisitions that we believe will build significant long-term shareholder value. Moving on to the quarterly results, we believe managed revenue and adjusted EBITDA are the best measures of our business from period to period, given our acquisitive nature and significant ramp-up, and pro forma revenue is the best indicator of our long-term growth profile. Pro forma revenue was $75.1 million for the first quarter of 2019, an industry record, and shows the step function growth our business is experiencing as we work towards adding high-quality assets to our portfolio. The pro forma number includes all announced acquisitions to date, including Eureka, Acres, Blackjack, ATG, Select, and the Emerald Dispensary operations as if they had occurred on January 1st, 2019. In the first quarter, our managed revenue more than tripled over last year to a record $40.7 million and was up more than 17% quarter over quarter. Total revenue increased nearly fourfold to $35.3 million in the quarter versus the comparable prior year period and was up 10% over the prior quarter. Our retail and wholesale revenue saw a nearly fivefold increase to $27.8 million during the quarter compared to $5.7 million in the first quarter of the previous year. Management fee income increased nearly 122% to $7.5 million in the quarter versus the comparable prior year period. The increases in revenue year on year was largely derived from the acquisitions made in 2017 and 2018, as well as rapid expansion from building out our existing licenses in Florida and New York. As we grew our retail footprint to 42 dispensaries as of March 31st, 2019, from 14 in the year-ago period. As of today, we operate 45 dispensaries, which does not include additional dispensaries that are operated by acquisitions pending regulatory approval. Gross profit before the impact of biological asset adjustments was $18.1 million for the first quarter of 2019 compared to $4.2 million for the first quarter of 2018. The significant increase was due to improved operating capacity and efficiencies of our business and increased sales, particularly in Florida. Revenue from cannabis sales in the quarter was $27.8 million, up $22.1 million or 368% over the prior year and up $4 million or 17% over the sequential quarter. Our gross profit from cannabis sales for the quarter was $10.6 million, resulting in a gross margin of 38%. The decrease was due to shortage of products and product discounts in Florida, as well as higher third-party oil prices used in manufacturing products that were sold during the quarter. As mentioned in our last quarterly call, while we expect our gross margin from cannabis sales to trend upward in the long run, particularly as we realize the benefits of vertical integration in the vast majority of states we operate in, it will continue to fluctuate quarter to quarter based on the number of processing and cultivation facilities we expand or bring online. This was particularly true in the first quarter when we experienced higher overall cultivation expenses in Florida and Connecticut without a substantial harvest. Adjusted EBITDA was negative $3.7 million for the first quarter of 2019 compared to negative $2 million for the first quarter of 2018. This compares against EBITDA of negative $661,000 in the fourth quarter of 2018 and was driven by temporary pressure on margins due to planned investments primarily in cultivation and processing to meet current and future demand. Net loss attributable to CURA-LEAF Holdings for the first quarter of 2019 was $10.2 million compared to net loss of $2.3 million in the first quarter of 2018 due to the aforementioned lower gross margins, an increase of $4.9 million in non-cash depreciation and amortization, a $2.9 million increase in interest expense, and a $1.2 million increase in share-based compensation, offset somewhat by a higher year-over-year tax benefit of $1.2 million. On a per-share basis, net loss per share was 2 cents compared to a loss of 1 cent in the first quarter of 2018. Moving on to the balance sheet, as of March 31st, 2019, we had $172.6 million of cash and $83.3 million of outstanding debt, with fully diluted shares outstanding of 453.6 million. I'd like to leave you with a few closing thoughts. First, despite the near-term impact of cultivation expansion on gross margins, we believe all of our investments will accelerate earnings growth throughout the rest of 2019 as more cultivation capacity comes online, more retail locations open, and we begin addressing adult use markets. Second, while our team remains focused on driving organic growth, we have also announced several transactions over the past few months, including Select, which provides a step function in our growth trajectory, and our efforts on this front have allowed us to deliver pro forma revenue of $75.1 million, the highest in our history and an industry record during the first quarter. Finally, we believe our aggressive expansion plans, both organically and through acquisitions, will drive strong top and bottom line growth and ultimately long-term value creation for our shareholders. Given the volume of our M&A activity in recent months, we anticipate providing investors with an updated outlook on our next quarterly conference call. We remain confident in our strategy and continue to expect a strong back half in 2019 and, more importantly, an impressive 2020. With that, I'll turn the call back over to the operator and open the line for questions.
Thank you. At this time, we will be conducting a question-and-answer session. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your questions from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star key. One moment, please, while we poll for questions. Our first question comes from the line of Robert Fagan with GMP Securities. Please proceed with your question.
Hey, guys. Thanks for taking my questions. I was just wondering if you could give us a bit of color on this. You know, the sequential growth in this quarter versus some of the past few quarters was a little bit slower. Is that only due to Florida, or were maybe there's some other areas where growth was a little bit slower, Q1 versus Q4?
Yeah, I think it was largely Florida, and as you heard us say, we've seen growth come back in Florida. We just had some supply constraints on flower. We've been able to fill our stores with flower, and in fact, May was about double of that of March.
Okay, great. Well, that is encouraging. That was just the one problem spot. And you know, just to get a bit of clarity on the gross margin, is there any one-time items that could have affected the profitability on that level, like, you know, perhaps expenses related to biological assets that get a specific treatment under IAS 41 versus IAS 2? We've seen, that, be expensed as opposed to capitalized. Is that something that could have factored in?
It could. Obviously, biological assets does have an impact on our gross margins. I would say additionally, as I think about our ramping cultivation, so as I mentioned, we're ramping cultivation in a number of states, not just Florida. Connecticut, for example, we've got a facility that's going online, but that's costing us additional operational expenses that we don't have a harvest on. So that is, if you want to call it one-time in nature or unusual, it's causing a little bit of a drag on margins.
Okay, so in that sense that you have costs where you don't have harvests, can you give us an idea of what those costs may have been? And given, I believe, you have the option of capitalizing those, it would obviously make a difference in your adjusted gross margin should you treat them in that other fashion.
Yeah, I don't have the quantification sitting right in front of me, but again, I would say that, you know, as we mentioned in Florida, we were just bringing on capacity. Connecticut, we did have some, I'll call it, redundant expenses that were going through our margins, and there's one or two other states where we're continuing to build out capacity where there's just not as much harvests.
Gotcha. Well, thanks very much for that, Neil.
Robert, let me just answer that. The growth numbers between the first and second quarter are going to come right back to what they were historically, if not higher. We're seeing very substantial growth, as we said, in Florida. That was really the real problem in the first quarter because we just didn't have enough. We opened up many more stores than we had capacity out of the growth facility. Now that the new growth facility is up and operational and full and running at full capacity, we're starting to see those numbers in the second quarter double. June looks to be a tremendous month for us in Florida. May was a very, very good month. So you'll see it's really a one-time quarter thing on the revenue side. And as the growth facilities in Connecticut and Florida come up to full speed, you'll also start seeing a reflection in our gross margins both in the second and third quarters.
Great. Well, thanks, Boris. That's very helpful. I guess, you know, we got to try and ask this. It's a nice to have, but we appreciate having the insight into the pro forma revenues for the quarter. Any chance you guys could give us a bit of maybe vision to what a pro forma full year 2019 would look like?
I think, look, as I mentioned in our prepared remarks, we're in the background. Obviously, we've had a number of M&A transactions over the last couple of months, particularly with Select being the largest of all those. We're working to get a full, basically a full guidance number that will include all the acquisitions. As we mentioned, you know, we still believe strongly and are highly confident, and Boris just mentioned this, in the step function of the second half. But from our vantage point, you know, we'll come back and anticipate giving you guidance in our Q2 earnings call. I think it's just too early right now to give you an exact pro forma full year.
I mean, the problem, Robert, is we haven't closed a lot of these transactions. The smaller ones are closer. As you probably saw, the acquisition in Arizona we announced only a week ago, closed yesterday. We've got a few other transactions that will close very quickly. Eureka closed pretty quickly. But there are certain states where regulatory issues last a lot longer. For instance, in Nevada, Massachusetts, are some of the states where the regulatory environment is such that it takes longer to close the transactions. So we think it's prudent. We don't like to guide or give numbers that we can't make, and so we think that it would be prudent for us to wait another quarter, close up some of these transactions, see where the federal government is on the Select transaction, and then be able to guide our numbers into the end of the year much more clearly than we could right now.
That's totally fair, guys. I just thought I would try and ask anyways, but thanks for that color.
Good try. Good try.
Thanks. We'll get back in the queue.
Thanks, Robert.
Our next question comes from the line of Matt Bottomley with Canaccord Genuity. Please proceed with your question.
Good evening, Joe and Boris. Thanks for taking the questions. I'm going to start maybe where Robert left off, not to be too annoying, but maybe just looking at what to expect for 2019 in advance of formal, whether it's guidance or directional indications when you report next. Is it fair to say that if you take your $400 million guidance for 2019 and just take what Select did this quarter, which if you look at the pro forma difference, looks like they did about $34 million. If you take that $34 million and run rate it and add that to your $400 million, is it fair to say that $550 might be the low end? And again, apologies in advance, but I just also thought I'd ask.
Yeah, again, I think the challenge for us is timing on some of these things. Certainly, you mentioned a number for Select. You've obviously figured out that a majority of our pro forma in Q1 does relate to Select. We do expect to see growth in Select over the upcoming quarters. And as we mentioned, we continue to expect for us that ramp or that step function in our second half. I will add that we are watching closely with respect to Massachusetts. We're hopeful that we'll hear soon and have better news on the adult use and on ATG in terms of when we can close. So that's why, from our vantage point, we are going to come back in the second quarter and give guidance.
Great, fair enough. And next, I just want to touch on what I think is one of the potential highlights of last call. I know it's not material to your operations yet, but just the CBD side of things and the announcement last quarter of getting into 800 CVS locations. Has there been any feedback yet? Can you telegraph if there's been any reordering or how that pilot program is going? I understand it's just topical, but any color on how that's been so far?
Hey, Matt. Yeah, I mean, I would say that, many national retailers are still coming to their CBD strategy, and it's still very early days, but I'm optimistic about the program in general. I mentioned in my comments that we just launched a new 16 SKU line of skincare products. We launched a pet product this month. With our exclusive relationships, we're developing, a very deep pipeline of national retailers. So I'll say overall we're optimistic in the program, but it's still very early days. And to be candid, national retailers are trying to figure out their strategies, right? Some are taking the most conservative approach, which are only topicals. Others are going deeper into the SKU offering. And so we think we're set up for really great growth in the year, but I can't give you specifics yet on, velocity or anything like that. It's just too early.
Not only that, Matt, but the retailers, we're going to be totally honest with you, don't want us talking about what we're doing with them, what numbers we're doing at this stage. So they're trying to keep it, down low at this point in time. I think that will change as time goes on, but at the moment, the retailers, particularly the big box national retailers, do not want us, sort of being too transparent about what they're doing.
Okay, understood. Maybe just moving to New Jersey, and Joe, just taking your prepared remarks into consideration. It looks like there's a lot of opportunity there. A bit of a headwind with some of the announcements on the rec side, but I think a bit of a silver lining, in particular to CURA-LEAF, because I believe the last time I looked or we chatted, you guys had about 40% market share. They are planning on expanding their medical program. Do you have any color on what exactly that expansion initiative will entail and how you might leverage your existing position in the market in that initiative?
Yeah, I think it's safe to say that, we see a tremendous amount of growth ahead of us in the medical market, right? It's still very low penetration, and so there's a lot of patients out there in New Jersey that don't have their cards right now due to systematic issues and a lack of access because there's so few dispensaries. What I would say is that without, predicting specifics in the law, I'm confident that we'll be able to start leveraging wholesale relationships. I'm confident that our 2 new stores will open this year. We're increasing our cultivation and manufacturing capacity. As I said, we're one of only 2 producers in the state that can make oil formulations. So, we think we frankly have a lot of tailwinds in New Jersey, and we think the year sets up really good for us as we continue to build our business. So that's probably one of our strongest states.
Great. Just last one for me, and I appreciate. Sorry, Boris.
Matt, I would like to add on New York. I know Joe talked in his comments about New York, but I have to say that I'm most excited about the initiative in New York with the expansion of the medical program. If New York State does allow flower, and we don't have any reason to believe they won't, and if they allow additional expansion of retail locations for the existing players, New York could become as big, if not bigger, than the Florida market. So we're waiting to see how it grows, but at the moment, it seems that there seems to be quite a bit of initiative in Albany to pass a expanded medical program very quickly.
Great, appreciate it. And sorry, just one more quick question. It does relate to New York. I know that part of what's keeping that market back prior to this expansion initiative is the pricing in New York is really keeping the illicit market quite active. And I understand it's pretty robust in the state. I think I recall you chatting about a couple quarters ago your strategy to maybe compete on pricing there to bring more people over from illicit channels into legal channels, considering how the pricing is in the state. Do you have any anecdotes from any of your retail locations yet as to if you're doing that and if that's working? And that's it for me. Thanks.
Yeah, Matt, how I would characterize New York is that I think the growth in the market is primarily limited to the very limited products that are allowed to be sold in the state. I mean, they're mostly oil-based formulations at the moment. There's no edibles, there's no flour. Furthermore, the conditions that patients can get their cards for is quite limited. So there's some systematic problems with the market that we think will be addressed in the medical expansion bill that Boris mentioned. But we know that we have achieved a 17% market share in the state, so we think we're getting more than our wallet share. I'm confident in our strategy in New York. We're doubling the size of our cultivation facility in advance of what we see as positive legislative changes. So, I think New York frankly has a lot of opportunity for us to achieve some serious gains in 19 and beyond.
Thanks again.
Thanks.
Our next question comes from the line of Graham Kreindler with 8 Capital. Please proceed with your question.
Hi, good evening, and thanks for taking my questions here. Joe, you mentioned earlier on the call that CURA-LEAF is working to develop a new cartridge for the vape pen. So I was wondering if that work was done independently or if there's been anything leveraged from the Select deal in terms of working on the new hardware.
No, I mean, we have a number of R&D initiatives that we always have going on in the background. We've got a team of brilliant scientists that are great formulators and chemists, and so we're launching an oil product in California this quarter, which we think will, as I said, be the highest purity, highest quality oil in the market, and we're really excited about that. It's been in development for about a year, and we expect to take that nationally. It's, some of the things that we don't talk about a lot, but we have going on in the background is a tremendous amount of R&D initiatives to try to stay ahead of the curve and put out, products that are responsive to consumer needs. And so, we're very excited about that. And it was developed independent of any sort of relationships with Select or anybody else.
Understood. Thanks. To follow up on that, are there any sorts of integration efforts or collaboration that can take place between the two companies ahead of closing?
I mean, at the moment, we're running the companies as independent entities. Given the size of the transaction, we're going to, go through the Hart-Scott-Rodino approval process, and so, it's very clear that we can plan for integration, but at the moment we have to run the companies independently. And, as Neil and Boris mentioned, as we get more certainty around the timing of that and the potential to close the transaction, we'll be able to, guide the market with more confidence with respect to the combined companies and how they'll perform through 19 and frankly, beyond.
Okay, understood. Thanks for that. On the CBD side of things, you mentioned earlier on the call about developing broker relationships, and I know CURA-LEAF works to be vertically integrated in the markets that they're in. I know the cultivation side on CBD might not be as attractive, but just wondering, between those broker relationships and the existing processing capabilities, how much of that might be done in-house, or you'd look to have that done by third parties as that market continues to grow?
Right. So we don't intend to grow any hemp full stop. We believe that hemp will be commoditized fully within the next 24 months. And so our position on CBD specifically is that we will, in the middle of the supply chain, be formulators. And so we think that's an important part of the supply chain. And what, frankly, is our differentiator is that we're, a cannabis company. So we'll be formulators, but we will likely not manufacture our products either. So we have established co-manufacturing relationships with some of the biggest cosmetics manufacturers in the countries. We're using some of the biggest brokers in the country to sell the products. And so it really, for us, is about formulating products and really a sales and marketing process, more like a traditional CPG business.
Okay, great. And on the Bido side of things, is there any timeline for potential commercialization of those products?
So we have just launched that product, and we expect, that to be carried through national retailers in the back half of 2019 as well. As you know, the pet market is a big market, and I think that consumers are showing a high degree of interest in using CBD for their pets, and so that's a line that we're excited about.
Okay, thanks. And then the last one for me is, with respect to CURA-LEAF's brand portfolio, understanding the vision with the recent Select deal and where CURA-LEAF fits in, sort of wellness and lifestyle, how large does the company envision its brand portfolio ultimately getting? There's obviously been a number of acquisitions on the brand side recently. So what are the company's thoughts on that moving forward?
Yeah, I mean, we are very focused on developing CURA-LEAF as the biggest medical wellness brand in the country. And, with the integration of Select, we'll be focused on developing that as the biggest adult use lifestyle brand. We really see it as a two-brand architecture right now. I think we've been very candid in that we don't believe in the house of brands thesis. We think it's going to take a tremendous amount of capital, energy, and time to create two national brands. And so we're going to be very focused on that brand architecture at the moment.
Okay, appreciate that. Thank you very much.
Our next question comes from the line of Brett Hundley with Seaport Global. Please see with your question.
Hey, thanks, guys. So I just want to ask you directly, I mean, are adult use delays in New Jersey and Massachusetts, I mean, are they making you, potentially remodel your $400 million number?
Yeah, I would say first off, New Jersey isn't a delay. The reality is New Jersey and New York are both considering adult use and/or expansion of their medical. With respect to Massachusetts, we've already had had one of our inspections. So as I mentioned, it's really a question of when we get our license as opposed to if we get our license. Certainly the timing of that at this point is in the regulators' hands. So given that, it is difficult to predict with exact certainty what quarter that revenue will fall into.
Okay. And Neil, I mean, I don't want to belabor it, but I in the past I've heard a lot of confidence from you guys on that $400 million number, and it just feels absent on this call, and so I'm sorry to push you on it, but would you still say that you have a lot of confidence in that number for this year?
Yeah, again, I think what we are trying to relay is we do continue to see the step function growth in the second half, which we were extremely confident about last call and remain confident about today. With respect to Florida in particular, which is obviously one of our larger markets, we remain highly confident. We've actually seen May double that of March's revenue. We've got our supply chain through Mount Dora fixed. We've got a lot of the cultivation for our other markets, for example, Connecticut and New York. I think we're well ahead of demand. When I think about Massachusetts, we're actually building out further capacity in Webster to take advantage of the adult use market there. So we're not waiting and seeing. We're actually building out capacity. So when we get our licenses, we're ready. I think from that perspective, all of our strategic actions that we're working towards, we remain highly confident with. I think what you might be sensing is just our inability to predict regulators, which I think most of this industry has realized that, we are beholden to regulators. We do have the privilege of having licenses, and with respect to Massachusetts, we don't have an exact timing at this point. So it's more just trying to know exactly what quarters stores will open in Massachusetts with respect to adult use. Outside of that, I think from a business perspective, we continue to remain highly confident.
Okay, interesting.
I'd like to also just clear it up so that let's be completely and brutally honest about this, right? If we don't get our licenses in the third quarter or at the end of the second quarter so that we have them in the third quarter, obviously that will be an issue, right? We have a pretty big number budgeted against Massachusetts for this year. However, the reason we don't want to, reason at the moment we're still confident is that we do feel that we will get our licenses at the end of June, and hopefully we'll be operating in the third quarter. We have a huge amount of inventory built up. And secondly, Florida is really taking off with flower. So we don't feel a need at the moment. So we feel we have a cushion built into the numbers, and we feel confident. However, I mean, if we're going to be completely honest, if we don't get our recreational license going into the third quarter, then obviously that will be an issue because it's a big number that was budgeted against our numbers. So, we are beholden to the regulators. We know the market's there. So in other words, if we do get our licenses, there's no question we'll have massive sales. But the regulator in Massachusetts, like the regulator in Nevada, and I think everyone's experienced it both in Massachusetts and Nevada, is very, very slow. And so we can't predict when they'll award the licenses. We've been through all the checks. We've been through all the inspections. We've gone through all the checks and inspections in flying colors. There is no issues to CURA-LEAF at this point from the regulator, except to put us in the queue and approve the license. And so that's the issue that we're faced with right now, and we're waiting. Obviously, we're conversing and talking to the regulator, but we have to, we're at their mercy at the moment in terms of getting the licenses. But we are very conservative, and if we felt that the numbers were unachievable, we would have come out and said that. At the moment, we don't think that's prudent on the basis that we hope that if we do get our licenses at the end of June and that we can start selling our retail products, our recreational product in July and August, coupled with the growth we're seeing in Florida, we feel pretty comfortable. Okay.
Thanks for the comment, Boris. I know when left to our own devices, we sell-siders can be dangerous, so I appreciate it. How about guys on CBD on the eve of the FDA tomorrow? Beginning this process, I'd say. What is CURA-LEAF's appetite to formulate ingestibles? And actually, what I'd be more interested in is what are, by your view or your count, are retailers willing to stock these products over the interim?
I think it's hard to make a generalization. I think, retailers are coming to their own unique strategies. And, as you pointed out, the FDA is learning and trying to figure out how they're going to regulate the space. Clearly, the safest lane, the lane with the least amount of enforcement priority is in the topical line. And so, as I mentioned, we developed a 16 SKU new line of skincare products we're highly confident in. We developed a pet product. And so I think those are the areas we will, primarily focus on in the beginning. But over time, do we believe that CBD will be a full market with, all products, including ingestibles? I'd say yes, I do. I think the American consumers are continuing to show an increasing, demand for those products, and so I think they'll be sold because I think there's a lot of demand for them.
Okay. Are you working on the ability to formulate that right now in the event that comes into play?
We have all kinds of, R&D in the background going on in formulation, so I'm confident that we can, develop products that are responsive to every segment of that market.
Okay. And just last one for me is on Select. Can you talk to me a little bit about what you might expect from a potential customer attrition standpoint as that asset moves under your umbrella? Clearly you have competitors on the retail side out in the West. Select has a very strong market share in those key states. So I am curious, as the two assets come together, do you believe that you can largely keep distribution and the customer base as it stands today when Select comes under your umbrella? Thank you for taking my questions.
Yeah, we absolutely do. I mean, if you think about California and Oregon, for example, where Select is the clear and away number one brand, we have virtually no retail in those markets, right? And so we're not competing, frankly, with anybody in those markets at the moment, and Select has incredibly strong relationships with their retail partners. What we're most excited about is our ability to carry the Select brand across the entire country, right? So we think that, that transaction is unique in that we're taking the number one lifestyle brand and now being able to put it onto our platform on the East Coast. And so, in general, overall, we're super excited about the transaction and don't believe there will be, a loss of customers, as you described. We're highly confident in their ability to continue to execute and build their brand and also go into new markets. I mean, there's a number of markets, for example, that neither one of us are in at the moment. Colorado just passed a public company bill today. And so I think you can expect to see Select be a big brand in Colorado, Michigan, Oklahoma. There are a lot of markets where we don't exist, but we fully intend to bring Select in a big way.
Our final question comes from the line of Russell Stanley with Beacon Securities. Please do with your question.
Good afternoon, and thanks for getting my questions, and I appreciate it. First, with respect to Select, I just wanted to clarify where exactly are you at with respect to pursuing HSR clearance?
Sure. So we filed our paperwork with HSR. We've also been working with local regulators in markets like California and Oregon to receive approvals. And the transaction can close as fast as 30 days, and it could be many months if we get questions from the DOJ. So it's early days, but we're cautiously optimistic we'll close it this year and be able to integrate and really carry Select across the whole country.
Great. Thanks on that. And moving on to Florida, especially given the big uptick in growth you've seen after the additional smokables. Just wondering if you have any plans that you could share with respect to perhaps pursuing an increase in your dispensary cap, kind of following the model led by Trulieve a little while ago.
We will absolutely be looking to exploit that opportunity as well and get more dispensaries. We're on track to open up 35 stores this year. As we described in our comments and Neil and Boris spoke about, we've also brought on a 5-acre Dutch glass greenhouse. So we feel really good about that market given the growth trajectory and our growing infrastructure in the state. It's definitely going to be one of our best markets in 19.
Great. And just one last question for me, if I could sneak it in, and sorry if I missed it, but with respect to California, what are the latest timelines on the opening of the 3 dispensaries you obtained in the Eureka transaction?
Those are all in development and working through various local regulatory procedures. And so, as Neil referenced, when we get on the call again in Q2, we're going to try to guide in a comprehensive way, which will include all of our acquisitions, and we'll hopefully be able to give you some more visibility into the numbers, including those assets.
Okay. Great. That's all I had. Thanks again.
Ladies and gentlemen, this concludes today's teleconference. You may now disconnect your lines at this time. Thank you for your participation.